Right, and I believe we are live. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays, coming to you before the market opens. Unfortunately, this show will need to be a little bit shorter than my usual 1 hour. So that is why we are going straight into screen share. The reason why it's shorter is because I need to get my butt over to Rogers Campground in Lancaster, New Hampshire. And those of you that know where Lancaster, New Hampshire is, well, congratulations, and because it's literally in the middle of nowhere. And it's not easy to get to, and it's going to take a little bit of time. So this is where I am headed. It'll be a campground. I'm not sure how many people are going to go. It'll be fun, get to see a couple of friends, and be outdoors and do our best for social distancing. So we will try to act as responsibly as possible. All right, so that's where I'm headed. And the internet there doesn't work very well. So if I am missing for the next 4 days or so, it's because I did not have a good internet connection. But I'm pretty sure that there's a media room there and I can get a hard wire into the internet and I will bring you a stream because the markets are really moving. Before we get to the markets, if you want to support, please use the affiliate page. And thank you to those that have already started registering for the workshops. To be honest, the one thing that I'm really happy about is that so far, people that are registering for both. And that's really, really important because one is, I mean, they complement each other. I would rather see more people register for this than for this. This you can learn on your own. Anyone Googling could learn technical analysis. There isn't that much secrets in technical analysis that you cannot find for free on the internet. However, knowing how to manage your positions is a lot harder to Google and learn on your own. So I think this is something that, this is what sells, but this is something that needs to be learned if you're going to be a successful trader. Okay, let's go to, I'm going to say the stock market for last, I guess, once again. Let's go over to Bitcoin. Yesterday's drop is now fully reflected in this index, which only updates once a day. So here we go. And this trend line rejection, and now we can clearly see how we are in this hyperwave wave 7, still with us. And we have 1, 2, 3, 4, 5, 6, 7, 8 candles now. And this 8th candle is almost over. It's already Thursday, so more than half the week has gone by. And therefore, we now have 8 rejections of this moving average, which is very, very substantial. Not the moving average, sorry, the trend line that has been rejecting the price. And we will see where it goes from here. About 5 weeks ago, I drew this downward arrow. We're still consolidating, but like I've been saying for months now, I have no reason to walk away from my prediction early in the year that Bitcoin is going to get stuck between 6,000 and 10,000 for the majority of this year. Now we have spent lots of time above 9,000, but that doesn't mean anything if we're going to end up pulling back down towards 8 or 7. Let's go to the weekly chart. The weekly chart is absolutely not useful other than it is still in the middle of its 1 to 4 candle correction. Now, these candles are a week long, so we're going to be talking about this 1 to 4 candle correction for potentially every day for a month. We continue to get rejected by that trend line. We are now clearly below the moving average. And at this point, the only thing we really need to care about is where does this candle close? If the candle closes anywhere at current price or lower, to me, that is a bearish sign going into next week. So the daily chart has very, very clearly broken the underside of this triangle. The only thing that is still preventing me from removing this triangle, because I don't think I can fudge this triangle anymore, but there is a chance that we will rally and close back inside the triangle, in which case the triangle has not yet been fully violated. So it's all about where we close. However, as you guys know with the rules, I don't like to cross any of the bodies. So all I would have to do is adjust this triangle over to go through the opening of today's candle. And as long as we close, if this candle, I guess I have to shorten the triangle actually. Let me see if I hold the shift key, if that would help me get a straight line up there. Anyway, I don't want to spend too much time on this, but yeah, like that. So still my triangle, as long as if we rally here and we close above today's open, the triangle is still intact. If we don't do that, we would have to change things around with the triangle and see where everything stands. Oh, the BitMEX funding rate has flipped over on today's candle, and I believe it is now favoring the bulls. This is usually a contrarian indicator, and it just started favoring the bulls once again. It's been pretty flat. Usually when it gets to an extreme, it gets very, very interesting. But right now, the BitMEX funding rate is favoring the bulls, saying that leverage traders on BitMEX are a little bit overzealous to the downside. What bothers me is the RSI. You can see how the daily RSI is breaking a very critical horizontal trend line. I guess it broke it for a second over here. So we are talking about a break of the, I kind of like this RSI because it's a bit of a best fit line, but look how it's got a bit of a head and shoulders thing going on coming out of the oversold back in March. Clearly swings into overbought in May. What was the price in early May? Right here. Clearly swings into overbought. This looks like divergence because the price clearly went higher, but look at your RSI. I mean, I didn't notice it I don't remember mentioning it at the time, but in hindsight, clearly monster divergence between May and June. In June, the price goes higher. The RSI clearly is lower. And the same thing happening with the MACD. The price goes clearly higher in June. Look how much lower your MACD is. That is as big of a divergence as we get. I should probably use this for my presentation that I'm building out for TA, even though I didn't mention it at the time. Or maybe I did, I don't remember. But I'm noticing it now. Well, that doesn't really help anyone now, but I was always skeptical of these run-ups above 10,000 anyway, so it wouldn't have made any difference in my outlook for Bitcoin. I've been saying for months, feels like a broken record, that this weekly rejection of the trend line is going to be significant, coming in right here with a momentum sell and rejection of the downwards trend line or hyperwave line. And I've always been looking for this correction. The daily chart clearly showed monster divergence. Let's go back to the daily chart. So this break of the RSI is not good at all. Now, we just started. We can always rally back. But this break of the RSI is setting us up for another shot at an RSI oversold condition. Now, this is going to be very interesting because I do not anticipate divergence here. Because in order to get divergence here, we would need an RSI that stays higher than this low, while at the same time, the price of Bitcoin going lower than this low. Well, Bitcoin was pretty damn low back then. And I'm not anticipating Bitcoin to go lower than 3,800. So what I am looking for is a potential low in the $7,000 area. And that low in the $7,000 area should come with an RSI that is probably around this 30 mark. So not as low as 15 like we had. So you would get a higher high on Bitcoin, higher low on Bitcoin with a higher low in the RSI. and then they would kind of complement each other for a decent secondary low. The 4-hour chart. Now, like I said yesterday, I don't like this consolidation near the lows. We rallied a little bit, on this 4-hour chart, and now we're back here. And this is a very dangerous area for Bitcoin to be in. It is setting up for potentially more downside. Can't look at GBTC premium because the markets are not yet opened. As I've mentioned before, the Bitcoin dominance is disappointing. Gold is very interesting to me. Gold is hovering at the very top of this trend. I remain of the belief that gold should rally even if the S&P starts to drop, because while they both crashed in the onset of COVID crash, so stocks crashed and gold crashed. Now that investors have had time to think, I believe that they would be interested in a safe haven asset if the stock markets are going to be pulling back once again. So I do think that gold has the potential of breaking the all-time high. Now, this becomes a tricky situation. Normally, when an asset breaks an all-time high, after a decade or so, it rallies really hard. So there is a good probability that gold will rally significantly beyond the 2000 mark. So I can easily see gold breaking 2000, gold being all over the news about going to new all-time highs, and FOMO setting in on gold, taking gold from 2000 to 3000. I would be a huge seller of gold at 3000. I just don't see it going much further. So that's kind of my view on it. I would love for gold to go to 3000. Would love to sell all my gold. And right now, I am still in a long position in gold. And I'm still hoping to see that 2000 mark sometime in July. I think it can rally fairly quickly. I can see gold just rallying 100 points in a single day if the S&P falters. Glance at silver for a second, but it's not going to be any different. It's fully correlated with gold. Oil is going to be correlated to the stock market. As the stock market pulling back, oil is pulling back. It's not pulling back by much, but it is pulling back here. You can see the double 13s right here. So oil's been, topping and slowing down, but it's hard to believe that gold was negative $40 just a few months ago, and now it's positive $40. Crazy, absolutely crazy. So there was some interesting volatility a few hours ago in the S&P. I'm not sure what news got released around 8:30 in the morning. Must have been some economic factor, an indicator. And it, gave you this Darth Maul candle, new low, new high. It looks like the market has decided that whatever news this was positive news. I didn't really pay attention to what numbers are coming out today. I don't know, manufacturing numbers, sales, I have no idea. But as a technical analyst, I'm going to look at the daily futures chart because the live market isn't open. I remain short in the stock market. I did not exit my position. Right now, the market is not yet open for the day. This is a reversal candle. I am anticipating new lows. I'm of the belief that once this low with this critical support, this horizontal green dash line support, if this falters, this could significantly accelerate the market to the downside. I anticipated this faltering back here, but it's even more critical here. So I'm going to draw a very important red line here. I'm going to use the bottom of these two candles. And it's exactly where the low took place overnight in the last 12 hours. if we close below this line, the stock market is in serious trouble. Serious trouble. I believe a closure below that line accelerates us down. How quickly, how fast, I don't know. But I would be looking at something like, and this is where a problem comes in. I don't believe anything here is good support. There is one good level of support, and that is at around 2,900. But here is the flaw with the logic of 2,900 being good support. It was already good support, and I don't like double bottoms. And this is why if we do close below this red line of 3,020 points on the S&P, I don't know where a good support point is. There is no good support point. To be honest, the best support point in that case is actually here around 2650. 2650 becomes the best support because that's where the first slowdown took place off the bounce. It is a critical Fibonacci line as well, coming in from the top of the run down to there. And everything in between here at 3,000 and here at 2650, everything here has been like just consolidation. There haven't been any clear highs and lows. And this creates a really, really big dilemma. So this is what I'm kind of looking at. And this can take a while. It's not going to get there in one day. It could, but I doubt it. The markets will close. So I'm kind of looking at this. And then maybe in September, maybe if there is no wave 2 or wave 2 is not that bad, because wave 2 is coming. And the people are acting irrationally again. Let's take a look at the, oh, I can't use the R word anymore. Let's take a look at the stupidity of New York State. New York, New Jersey, and Connecticut. And Connecticut implement 14-day quarantine. This just happened like today or yesterday. Yeah, here it is. Here's the stupidity of the governments at work. Let me explain. So New York, New Jersey, and Connecticut will impose a quarantine on travelers. Okay, come on. On travelers from any state where infections pass a certain level. In the order currently applies to 8 states: Alabama, Arizona, Arkansas, Florida, North Carolina, South Carolina, Utah, and Texas. The 14-day self-quarantine order mirrors similar orders other states imposed on New Yorkers earlier in the crisis. So basically, this is a tit for tat. So here's what we're going to do. If you are an Arizona resident, I'm going to pick on Arizona because I kind of like Arizona or Florida, where I used to live when I was in my university. So, hey, you live in Florida. Florida has a high, a lot of new cases. Oh, Jesus Christ. The last person I want to listen to right now. I just closed you. Why are you still speaking? Okay. So you have a high probability of having COVID. So if you come to our state, we will make you stay here for 14 days so you can infect the maximum amount of people. Stay here for 14 days. You have a meeting that you want to take. You will take that meeting and then you will stay here. We will force you to stay here an additional 13 days so you can infect the maximum amount of people for us to get sick in our state. This is the logic of the stupidity of people running the government. I have like no words for this stupidity, none whatsoever. Okay, let's move on to the markets. I do want to be here when the market opens, but then I do have to get going. So I'll stay here for maybe 5-10 more minutes. Let me see if there's any questions in the live chat. Looking at your live chat, guys. I thought you're supposed to self-isolate for 14 days so you won't infect anyone. How is New York, New Jersey, and Connecticut going to enforce self-isolation as they're opening restaurants? How? How are they going to enforce it? If someone flies in from Florida, are they going to have a cops like, watching them and like making sure they're locked down in their apartment, only ordering food? Like how? How is this going to get enforced? What is stopping people from flying in to Philadelphia and taking a 45-minute train to New York City and then a 45-minute train back to New York City and flying out? Like how dumb are these restrictions? That's not enforceable. Like someone's like, you don't stay for 14 days and go to Six Flags. No, that's exactly what you would do because it's not enforceable to keep you isolated. EU is considering blocking US flights. I thought they were blocked already. Tone, what do you think a good solution is? Well, I wouldn't have these restrictions, but if you must, don't allow flights. That's it. Don't allow flights. You have the records of who is on a flight. So anyone that has flown through Arizona or any of those states. So let's say New York doesn't want any people from the high infected states. Okay. I'm not saying I agree with the law, but here's how you do the right law. You say, hey, as of 48 hours from now, if you have been to any of these states in the last week, even, connecting at their airports, you will not be allowed into New York City airports. So you better get your ass here in the next 48 hours. After that, there will be no landing permits granted to flights from those states. In addition, if you are connecting somewhere, you can't fly from Arizona to, say, I don't know, Massachusetts, and then fly from Massachusetts to, say, Maine, and then from Maine to New York or New Jersey, because we will know if you've been to Arizona in the last 14 days or 10 days. So you will not be allowed in and into the states. So if you want to get back to New York or New Jersey or Connecticut, you better do it before a certain date, like in 48 hours. After that, those people won't be allowed in. Like, it makes no sense. If you are scared of people from states that have a high concentration of COVID, you don't make those people stay more in your state. You make sure those people can't come in. Now, that's enforceable. You can enforce who can and can't fly. You can't enforce who can and can't drive. So there's nothing you can do about someone driving from Texas or South Carolina into New York. So you just live with it. But you can prevent people from maybe even getting on a train. But I don't know how many people train from South Carolina to New York and New Jersey. But I mean, I'm not saying I would do it, but if I was in charge of implementing an enforceable way of preventing COVID in New York, that's what I would do. I would make sure they can't fly in, not to make them stay longer. That's insane. This isn't really up to the president. The president has nothing to do with this. The president should get involved as little as possible in state laws. States should have a decent amount of power. That's the whole point of America, is that there is as much separation of power as possible, and there's all these balance checks. So a president, overruling states is actually not what you want. That's more like a dictatorship. Oh, wait, markets are open. All right. So the markets are open. This is our first candle of market open. As you know, the tone Vays rules, you never trade the first 15 minutes of market open because you never know which way it's going to go. I usually like to wait till 10 a.m., but I have been known to execute trades after 15 minutes, but never before. The amount of money I have lost in my life trying to trade the first 15 minutes of market open is disturbing. All right, so we wait and see. Let's look at the actual cash market. So let's see where this goes. This is my new stop loss for my short position. If today's candle closes lower than yesterday's low, if we get a red candle today, I will be moving my stop loss to slightly above halfway of yesterday's candle. In fact, I'm almost ready to do that now. I would be very uncomfortable with my short trade if we trade higher than halfway up that candle. So if we look at the body of yesterday's candle, the opening was at 31.15 and the closing was at 3,050. So what's the halfway point? So that is the halfway point. That would be 75 plus 5 more. That's 80. 390. So if we go, so 390 is a bit above the halfway point. So if I put this line, so here's where my stop loss should be at this point. And I will be talking a lot about stop losses here. This is what this workshop's about. Risk, leverage, money, and position management. Talking a lot about stop losses and a lot about money management, basically, how to make sure you don't get wrecked in your account. Let's go back. So coordinates, this, I would make this 3,091, I don't know, 55. I'm going to be a little bit on the safer side. So this is where my stop loss becomes. You can see right now we're rallying early in the day. I wouldn't mind closing the gap. I don't mind closing this gap from yesterday's low. from yesterday's close. Ideally, I just want it to go straight down because I'm in a short position. When I'm in a short position, I want the market to drop. It really is that simple. Let's go back to the 10-minute chart. So this is our opening candle. Not that interesting of a candle. The market isn't moving all that much, relatively speaking. I will be watching it very carefully. And this is now my new stop loss. At this point, my new stop loss is here. If the market rallies to beyond 3,090, I would consider my short position in a lot of danger. Now, in my case, I have to worry about time because I am in the options market and options expire, which is what makes them very, very dangerous instruments. I need this market to go down and go down soon. Otherwise, I'm forced to exit my position before the time bleeds away my premium. Going back to the futures chart on the daily scale, because it's just a little bit cleaner, I am looking for a major drop if we close the futures market below 3,020 points on the S&P. I'm sure the Dow and the NASDAQ are correlated. I know I haven't looked at foreign markets, but I do have to get going, unfortunately, guys. I'll be taking a look at foreign markets very, very soon. I didn't see any significant questions. So hope you enjoyed this episode. Once again, if you are interested in a full 6-hour technical analysis workshop, and even more importantly, how to actually manage your trading positions, these are the workshops scheduled for July. They will become the new on-demand videos. These two workshops will become these 3 on-demand videos. One of them will replace this one, and the other one will replace both of these as one. And then we'll talk about this one later on. Okay, that's it. If you want to support, please check out the affiliate page as well. Can't wait to start using my Embly card around the world once again. And I will talk to you all on the next one. People are asking me about Trader. I will have Joe on the show one of these days, and maybe I'll join his show. All right. Thank you so much, guys. And I will see you all very, very soon on another episode from PorcFest, New Hampshire, which is where I need to get to because it's far as hell and middle of nowhere. All right. Talk to you all on the next one.